afternoon, everybody. I hope that you're keeping well, and welcome to today's tutorial. Today we're going to be looking at the very basic concept of supply and demand, or support and resistance. There are multiple ways that people talk about this concept, but it is the most widely used concept in Forex trading. As I said, people call it supply and resistance. You get support and resistance. You get supply and demand. You get order blocks. You get all these different names for it, but the general concept always remains the same. What we want to be basically looking for is points in the market where price has reacted multiple times. And not only multiple times, but you want to be looking for areas where price has reacted as both support and both as resistance as well. The reason for that is that purely shows that those levels are key levels within the market, and those levels are the levels you're going to be looking to be trading off, to be completely honest with you. How we want to look at it is resistance in its most basic form is where you could expect there to be a surplus of sellers, purely because of resistance is the high point. And if we're looking at support, we're basically looking for an area where there should be a surplus of buyers. Now, keeping in mind with that concept, it does not mean that support and resistance has to hold. There are multiple concepts in trading where we trade breakouts, we trade bounces, everything like that. A bounce is basically where it does hold as a key level, and a breakout is where it does not hold as a key level, and we're looking to trade the retest of the opposite or inverse of what it was. But those are two completely different concepts that I'm going to be covering in a lot more videos down the line. But for today, I really just wanted to get into it and show you how to plot these levels on some charts. Mainly what I'm going to be looking at today is GBPUSD, purely because it's a great pair to trade at the moment. It's been respecting its levels quite clearly. And so, yeah, that's why I wanted to look at that. Keeping in mind, when I do my levels, I'm only focusing on daily levels down to 4-hour volume levels. That's it. I don't mark up my weekly. I don't mark up my hour, and I definitely don't mark up 15 to 30 minutes at all. For me, I'm looking for price to react around these key levels because that's where I'm expecting the biggest movement, or, as I said, the biggest surplus of buyers or sellers to kick in. So looking at GBPUSD, I'm starting with a naked chart here. Obviously, we've got it marked up here. This is obviously one of the trades that we took in the Telegram channel. Very neat trade. Got a cool 321 pips off the back of that trade. If you're not in the Telegram channel, guys, get involved. It's all free. We're doing some really good things in there. And, I'm very happy with how it's going and how successful we've been so far with the trading. Right, so how do we get to this point? All right, so let's start on the daily. So what I'm going to be mapping out today is just the daily levels. As I said, I think these are the most important levels because this is where you're going to get the biggest reaction on price. So that's what we're just going to be focusing on today. If you do notice as well, we're not focusing on full chart structure because essentially when we look back at history, the levels we mark should also be levels that price has corresponded to before in the past as well. Okay, cool. So let's jump into it. So first thing we want to do is a lot of people mark their levels with horizontal lines or horizontal rays, everything like that. I don't think that support and resistance is that stagnant. It's quite a dynamic range. So I tend to mark out zones where I'm looking for price to react from, as opposed to just stagnant numbers. Purely because of this reason, you will see price a lot more clearly in my eyes. But obviously, marking with horizontal lines and everything does work as well. But first thing we're going to look at, let's just get this chart in an appropriate viewpoint. Oh, get rid of that quickly. I do want to just draw this quickly here and change the color purely because I like my blues, obviously on brand as well. Right, so let's get in and start marking some levels. After this video, I'm going to do a little summary, and I'm going to want you guys, whoever's watching this video as well, please don't ever hesitate to send me your charts. I'm always open to reading and having a look at other charts, seeing what everybody's doing. So yeah, anyway, let's crack on. So first points I want to mark out. Obviously, we're going to mark this support level down here. I am going to mark it from the bottom of this candle here, purely because if we mark this zone here, we can still see that we are taking into account that it has bounced here along the top of this zone. If we pull that zone out to about there, you can see that we are still obviously taking into account with these levels here as well. And you can see how this level here is active very strongly as a support level It's kept the pair above all the way throughout here, a number of days. Buyers have kicked in here that actually took the pair to all-time highs over here. So we can see that this is a strong level for GBUSD. Also in respect here, buyers were unable to clear this level as a resistance until recently. So this has been a key level. Another key level that I want to look at is here. Obviously, we put a little thin line through there. You can see that we've got a strong level here of resistance. Now, how do we know that this is a strong level of resistance? Purely because, you know, we have seen the pair range multiple times between this level of support and also this level of resistance. Now, keeping in mind, this is a daily chart, so each of these candles represent 1 day of movement. And you can see the pair has ranged for quite a number of days throughout here before breaking out and finding support on multiple occasions coming in here. We have had it come down to test a little bit lower here, but like I said, it's not a dynamic number. It's not a stagnant number, guys. You know, you have to be keeping your mind in the fact that it is going to be moving about, and not every number is going to be to the point. So this is why I mark out the zones, because you can see we did break down here. But if you were trading this, you would see the buyers would kick back in here, and this would be your point where you'd be looking for buyers, is this breakout here. Okay, guys. But we can see coming into some strong resistance at the moment. I would even mark this level a little bit thinner, bring it down to about here. And you can see that's where we'd be looking for. Some of the other levels that we look for, again, coming into this level here, we want to mark this level. Why have we marked this level? Well, quite clearly, we can see price has been quite reactive to this level as a dynamic resistance. So you've had one touch here, rejection, one touch here, rejection. Buyers broke it here, but then found resistance in this upper band here and rejected all the way back down. We've got some nice wicks forming here. Buyers tried to break out again, sellers pulled it down. Here again, multiple times, buyers could not break this zone and were held down on numerous occasions with sellers keeping it down. However, more recently on the back of the USD weakness, we have seen GU break out quite well, massive breakout, to be honest. So these are some of the key levels. Other key levels that I'd be looking to mark is obviously our lowest support levels down here. Again, what this level here, this could signal a false breakout. Oh, let me just move that back. This level here, just marking those candles here, this could be what we call a false breakout, purely because what we've got here is we have broken down beneath this level. Sellers, we've attracted loads of sellers here on the breakdown, hoping that we'd see lows down here. But unfortunately, buyers kept it and smashed it back. And look how hard the buyers kicked in here. That's basically a concept of a false breakout. Again, we'll cover that in another video. But usually when a false breakout occurs, it is and usually does signal that there's going to be further strength in the opposite direction. But this is one of the key levels that we marked. Again, you can see the range that's been played between GU from here to here to here. So that's been quite a strong level of resistance. And really for the daily levels, I'd mark one more level, which is here. Why would I mark this level? Quite clearly, because you can see we've had multiple rejections here, rejections here, rejections here. So on an intraday basis, if we're looking down at the 4-hour chart, we can see how price has respected these levels quite nicely. So what you're going to be looking for basically as when you're trading is you're going to be looking for reactions off these levels. Now, obviously, the thicker the band I've got here is the stronger the level. But whenever we're trading here, what we're looking for is basically price action reactions around here. And you can see we've marked that up very nicely. Took a number of good trades off that. If we go back into time over here, you know, we can see how this level, if we pull this level out here, respected numerous times. If we pull this level out here, you know, resistance. It's found support numerous times throughout here as well. Support, support, resistance. Same thing here. Drag this level out here. You know, we can see that it's found, look at that, it's a huge resistance level here. So as you can see, this resistance level, this support level down here, this support caught buyers all the way up to break highs all the way up here. And you can see it's done the same here again. So once we had a bounce here, false breakdown to come out to induce selling. We broke, we cleared, we retested, and you can see buyers have just taken this pair all the way to highs again. So could we potentially see GU break? It all depends on this level here. And if it does break, what's in line for it then? Well, we can clearly see that we have quite a strong level of resistance coming into play here. So With that in mind, how do we use this to find targets? Quite clearly, what we'd be looking for here, based on previous price action from all the way back here in January, what we'd be looking for is if we get a break and clear of this resistance level here, we'd be looking for it to come back down. This is the basic concept of breakout. We wouldn't trade the breakout until we get a pullback to retest this level down here. Should we start seeing some bullish price action coming off this level, then we can make the assumption that, okay, this resistance has now turned into newfound support. And what we'd be looking for next is a move higher up into this resistance level here, as we can see numerous times here. Once we've cleared this level, price action has always taken it up there. Even here, the wick's fallen just short, but it's never failed to hit this resistance level here. So as I said, we're looking for a break, a retest, and a drive up. So that's just one example of supply and demand and how it comes into play on the daily. 4 hour, like I said, I'm not that big on it. I do use it sometimes. I used it on this trade. What you'd be looking for is, say we're in an uptrend here. You can see that we've had this resistance levels coming in here. It's kept the pair down. If we should pull that down a little bit. We entered this trade here because why? We were in an upward movement here. You can see by the formation of higher highs, higher lows. And then what we had here was a breakout. We broke back up above here. We came back down to retest this level of support. And then on the lower time frames, I actually used the 30-minute to enter on this one. On the lower time frames, we saw that it was finding support and we entered the buys. Why? Purely because, like I said, if we put a little circle around this area here, Eclipse, if we put a circle around this level here, and then we go back to our daily, you can see it's been a huge level of resistance. So the fact that we've cleared it again and we've had this huge uptrend forming here, also by market structure, we can clearly see here, we formed a new high, right? We did have a low here, but why did we buy here? Well, very simply because we had a new low formed here. That is our break of market structure right here. We're going to another video of that, but we can clearly see we made a new low, yes, but then we smashed a new high, and then we closed above this low here to form a new higher low. What that shows to me is we're in a corrective structure here, and we're actually forming a bullish trend here. So that's our first wave. We're making our second wave, and we've got another couple of legs to go, in my opinion. But because of this structure here, that made me realize, or that made me plan for a break and a breakout, purely because of this switch in direction. And again, we're using the daily to basically make this decision. But we can see, like I said, new higher low, breakout of this resistance, which has been a super strong resistance for the pair, obviously keeping it down throughout here. And then we're looking for that newfound support on the breakout. And because of this structure, like I said, we're going to find more buyers because direction has shifted here. That is just one example, guys. It's just a very quick video. Like I said, you can find this in multiple. You want to be marking these levels first on your chart. Always use your daily levels. Like I said, daily is where you're going to get the best reaction of anything. If we look at some of the previous charting as well, I think, unfortunately, it's signed me out of my TradingView account, and because I had to create a new one to do this, but let's just go quickly out of this. So guys, take notes of that. Please do, have a look at some of my charts in the Telegram group. I'm just going to sign out of this quickly, leave, close this GB chart. Let's switch into my proper one here. Sign out, sign in. Facebook. Hopefully I'm not, shit, I'm still signed on to my girlfriend's account. But yeah, guys, that's going to be the basic concept of that. I'm very sorry about this. Sign out, log out. There we go. Sorry about that, guys. A little bit of a nuisance. TradingView is super annoying in the fact that you can only sign in on one user at a time. But I just wanted to do that little quick step in there just so we can see how other levels have been respected. Zao Gold's been a fantastic one that's just respected levels. You can see when we're marking up gold, we've got a few little shit here. Get rid of this. Basically, we're marking up these key daily levels. UCHF was another fantastic example. You can see I've marked these levels based off these rejections between the highs and the lows and where we found support and resistance for UCHF. And you can see basically price has completely respected all of the levels. So how we would be trading this, obviously, you can see that UCHF is in a downtrend from here. So anytime we get a break of any of these levels, so we have this daily support level here. These are actually also the Fibonacci levels from this low to this high, keeping in mind because we were looking to see if they will hold, but we didn't. So now we're looking at a reversal. But because of this downtrend, we had this break of support structure here, and then we came up, we had the retest here, and sellers kicked in. As I said, when we're looking at retests of resistance, we're going to look for a surplus of sellers. And sellers knocked this all the way down to the park, constantly finding a bit of range, breaking down, retesting, sellers kicked in, and has driven UCHF to the floor. S&P, again, levels I've marked. We've seen multiple bounces. New Zealand USD, again. These daily levels, you can see why they're so crucial and why they play such a massive role. EuroChef was another beautiful one. We're looking at EuroChef, beautifully respecting these levels. Matching your Fibonacci levels up is another thing which we'll discuss in another video. So it's just a really quick video, guys. I hope you kind of learned a little bit about that. Just to summarize everything, like I said, use your daily charts to mark your levels and be patient on your trades and wait for those levels to be hit and see how price is reacting from them. That is where you're going to catch the biggest moves from. Not from your smaller time frames, but from your daily levels of support and resistance, supply and demand, whatever you want to call it. Just look for these huge areas where prices reacted multiple times and then trade off those levels. It's a really simple concept, guys, but as long as you're trading with the trend, obviously trend is your friend, then you're going to it's going to go in the right direction that you're looking for. Just be patient with the price action. Use the 1 hour to 4 hour for entries, and then set your stops below the last lows on 4 hours. And that would be my best suggestion to do with trading that. But like I said, guys, please like, comment, and subscribe. There's a lot more videos coming along. If you do have charts, if you do, watch this video and you want to give it a go, please don't hesitate to contact me on Telegram. Jump into the Telegram channel. I've got my personal profile in there in the bio. And you can always message me. Please share your charts, share your ideas. We're in this to learn together, guys. Anyway, hope you have a good day, everybody, and I hope you enjoyed that little tutorial. Peace.